Okay, so I'm gonna do a little bit of kind of a breakdown of Nasdaq last Friday. This is kind of just a like a showcase of like potential trades and stuff that I would be looking for. Um, Really quickly, I mark my zones. The candle beneath the purple for bullish zones, and then the candle above the purple for bearish zones. Like this for bearish zones to sell and buy off of this. Doesn't take a genius really quickly. Like we are clearly going up. We're bullish. We just mark out all this stuff. Like we're going to the top right of the screen. So the majority of the time I'm looking to buy. I'm not looking to sell stuff here, whether it works or not. Like sure, you can take this candle right here. You get a little tap. If you took this and you risked $100 or whatever, you had a potential to make like a quick 2 to 1. But you can't guarantee stuff like selling off of this or selling off of this. You can't guarantee it when it's going up. So that's why I'm primarily just focused on buying when it's going up. As for this red line, this just tells me the higher time frame. There's this zone right here, sell zone, and that's ultimately where it kind of tapped into and then reversed lower. So I had that marked out prior just to know there's a potential for price to reverse around this area. But before that, I didn't have any other zone other than this one. But this got tapped in before market even opened. So as you can see, we'll get a little reaction right there, but ultimately it gets ran through. So, I mean, I would just kind of monitor this in real time to see if we just kind of run through it and this acts as like a little pullback like this to continue higher, or if we actually get a reverse lower. And like in this example, we push in, we tap into that zone as a place to kind of make a little pullback and then continue through it. But I'll use the lower time frames, like the seconds time frame, as well as like 1 minute or 2 minute, just to kind of validate whether it continues through it or reverses. I mean, like we were trending up. It's not. I don't use like structure or rules to identify whether we're going up or down or EMAs. It's kind of just visually. Like when we push up, we'll get a lot of times we'll make movements like this, and then we'll break lower, but then continue even higher. So I'm trying to keep and stick on to my bias of bullishness as long as possible. I mean, as you can see here, this is exactly what happened. Like, sure, we push up, and we wick this high, and then we push lower, which could signal reversal, but I try and stick by my bias, and you can see it wicks again, pushes up higher, and then comes back into this zone right here. You could have made a play on this zone right here. Just personally, I tend to aim for the lower zones in situations like this, but I do confirm this on the lower time frame. So even if I did look to buy off of this zone right here, which it didn't actually tap on this time frame, but if we go to a 2 minute and we go all the way back here, we can see that the full zone is that, and then we can go back onto the 1 minute. So basically I'm choosing a 2 minute zone to trade off of, and that's like actually what it ended up tapping into. I mean, there is a potential you could take 5-second entries and stuff like that off of that if there was any entry, which in the reality there really wasn't. You can see that we let's replay this back here. If we record this, sorry if there's any background noise, but you can see that there's this small 5-second zone that it ultimately taps into, and then that's where it kind of gives the push up. And so kind of what I was saying on the 5-second, it's going down. On the 1 minute, it's obviously going up, and you can kind of see this is just like push down, push down, push down. It's that fake move up, and then it just kind of continues down through it. So a lot of times we'll get moves like this, and then we'll see this, and then it'll continue lower, and you're like, what the fuck? You expect it to continue. You expect it to switch up and push up continually, and it just kind of doesn't, which is just kind of part of the stuff. It pushes down lower, and I mean, like worst case, like if you're taking these refinements on the 5-second. Take this right here, you take this candle too. I mean, it's probably a break even if you're going to take 1-to-1 RR break evens, or it depends on how you do this. There is potential for some wins here, right here and right here, even if you're completely wrong, because you can see ultimately this zone ran through. But I mean, if you risk accordingly, like you have, there's RR even if you're completely on the wrong side. That's why I like confirming these on a lower time frame. But then you can see it ends up tapping into here, and then we get the break on a lower seconds time frame. It's push, 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 kind of like this is a thing I love to look for. It's kind of like a failure to go lower, or pushing like down like this, and then when we push up the second time, we wick the low and then we reverse. And so if you want to get a very aggressive entry, stuff like this, when it wicks like this, it pushed up into this zone right here, the sell zone. Let's change that color really quick. Pushed up into the sell zone right here, and then when it continued, it wicked the low and couldn't like actually continue with displacement. And by displacement, I mean like volume, like it was able to continue. And so what ultimately could happen right here, I don't know the future, taps into here, could then come back into this zone here or even lower, and then you can enter off of this long. If you wanted to get a riskier entry, you could simply take like the break of this candle and just cover the low like this and target higher. And then you kind of just, you either take higher time frame targets, or like you can go on the 30-second. You can see this is obviously a prominent zone right here. You TP some and you partial according to like what is available and what is on your screen. And so on 5-second, this would have been a valid entry. And then ultimately you can mark out this zone right here. And the safest bet is to simply place a trade like this, cover the low, because you don't know if it's going to come even lower. If you want a better risk to reward, I mean, you could risk and make a ton more money, but it's ultimately up to you. And then you take probably the same amount of trade. I don't know if this hits, but you can see kind of these reaction points. Side thing about sell zones, when there's a sell zone like this, imbalance candle above, and there's these wicks like this, it's like kind of like a rollover. I don't like taking zones like this. Ultimately, I want them to be kind of alone, or like the top candle or stuff like this. I don't like the candles that are like a lot of fuck around and then the drop. I don't like taking these zones because a lot of times they just get wicked or ran or not respected at all. That's just something that I figured out over time. You can, sorry about that. You could enter at like the imbalance or the purple. I don't do that. I stick to the ultimate stuff, and you can see we tag into this zone. There's two ways to enter: stop loss underneath the bottom, or you can simply place it above the candle that taps and cover lows. There's a ton of different ways you can enter. Some are safer than others, but ultimately, like, none of them will make you profitable or unprofitable. Every kind of situation is different. So I mean, you enter some ways that will work and sometimes they won't. You can't nitpick every single trade and just change your entry based on what works and what doesn't, because that's just not how it really works. Again, we see the push up into the sell zone. This is kind of the wicking stuff I talk about, like the sweeps of lows and it can't continue. So this would be a good bullish example of like, sure, we tapped into this sell zone right here. If we were going to respect this, we would have to close beneath this candle with like a body instead of a wick. So that just kind of comes back. And I mean, again, it's wicking this high. But because of my bullish bias and my bias to continue up even higher, I would expect, I want to be biased to buy regardless of selling action like this. Like, sure, this is like a signal that says that it might reverse, but ultimately I am seeing push, push, push. So if we do get into another trade, we mark out this zone the other right here. And if I do take a trade off of this, like another scale in position, I'm covering the low here, kind of just targeting the same exact thing. And whether it works or not, I don't know for sure, but I mean, I'm just kind of going with the flow of it all. And so then we have this zone right here, got tapped into, and so I want to see this hold. It could go lower down into this But I mean, we're pretty much, our bias is to take out this high. And so as long as like we're not getting anything, we're basically just getting sideways action before the tap into this. And so I mean, for all those traders that trade like ascending wedges and stuff, you see this, I mean, you pretty much can just take a breakout to continue up if you're really confident in this bias, because stuff like this, like zones like this, they are opposing to the actual bias, meaning this will probably get ran. And I mean, like, we did see it in the beginning, so it is hindsight, but this is just like the thought process when you take these. You see something like that, like, I mean, if you're one of those like traders, you can literally just kind of stop and you target highs and stuff like that. But I don't trade with wedges like that. But this is like the pullback, and then you would have actually gotten TP, which is nice. This is just how to confirm this on the 5 second, which is pretty cool. So yeah, there's a little volume imbalance here. I know the purple doesn't pick it up, but it's like a little gap here. So essentially this candle is the zone here. For me, taking a candle like that is valid. There is technically a gap in between that. It doesn't show on the purple for whatever reason, but this would be the zone. It continues, whatever. Let's just go to some more 1 minute examples of how I would have confirmed stuff. Oh, we missed that first one. We tap into this 1 minute zone. Let's take a look. We push in, and then we respect this zone right here, the buy zone, after we tap into a higher time frame bullish zone. Keep that in mind. We're also in here, which is a 5 second refinement of this 1 minute. And so like everything is kind of adding together, adding up fine, stuff like that. We see where this wick goes into, which is probably a 10 second on this side. I don't really care about that, but I'm just kind of showing you like how this stuff does indeed work. You see a gap here, the zone here, candle. But I'm just trying to show you that this stuff does indeed work. I mean, if we see this, wicks the low, breaks up. It's not exactly as pretty as the other one, but it is what it is. Then it breaks this high, pushes up, it respects this zone, pushes up again, taps into here, to the tick. And so right now, I'm expecting this zone to get ran, meaning ran through, because the bullish bias dictates that this zone shouldn't hold for more than just a pullback. We were looking for like a continuation. And so when the bullish bias is like, when the bias is bullish, these zones act as places of pullbacks when you see price like this. So this would be a sell zone usually, and then it continues and there's another sell zone up here. It's obviously not always picture perfect, but that's the thought process kind of going into this. Meaning this will, because we're trying to buy here, this zone should not hold to continue lower. And if it does, our whole idea of buying from this zone is completely just wrong. But you can take sells off of this. Like there's clearly like money to be made because there is reactions. But ultimately the buy you want to get into is this one right here. So it does tap. Perfect. We get that stop loss underneath the zone. If you want to hit underneath the low, that's fine. But to me, the zones are the invalidation points. And then, I mean, we look to the left, we target something like this. Again, if you remember what I said, I don't like zones like this. When it's this like weird, like kind of rolling over, sign of rangy stuff, zones like this tend not to work. And you'll see a lot of times they'll just get ran by a wick and then the reversal will come after. Meaning like there's these highs here, you'll see a wick and then the reversal will come after and for another pullback. And so you can see we wick out all these highs right here, people that are selling or buying or whatever. And then we have all these lows right here and we're working out all the lows and then we just continue higher. This is kind of that pushing up, pushing up, pushing up, pushing up, and then we kind of get even like a push lower and then a continuation. And it's just like a fake out to people that are reversing their bias, which I mean, I'm trying to stick to a bullish bias every single time when I'm buying because obviously things will tend to follow a trend more than they're not gonna. So there's a 7% or 7 RR. You risk $100, you make 700. This is a valid trade. Sure, you could have TP'd a little sooner, like here if you'd like. I'm not one to dictate your TP stuff. I would not have taken profit here because this zone is already tapped into, meaning this zone is probably not going to hold in the future. There are times it does, but stuff like that. And then for me, it's like if there's this zone right here and there's a zone right above it, usually the top zone will always get tapped into. And because it's this weird sideways shit, you could squeeze out a little bit more and get like a 8.5 or 8.3, whatever. It just makes sense. But ultimately, there's this valid trade that would have worked. You could have made a 1 or 2 R on taking this sell here back down in. But again, median range trading, kind of trying to play both sides is not always perfect. Tap into here. This is valid. We take that buy. Yeah. The reason why I chose to take this low instead of marking the zone, it's not because I saw this with hindsight, but I've seen a lot of times where there'll be two zones like this super close together and it will actually tap into the bottom one. It doesn't always happen. It's just a safety precaution for this. As for this zone, same kind of thing applies, but there is more money to be made with a smaller stop loss, but in this trade you would have been wicked out. Take continuations. We go on the 1 minute. I'm just gonna play price a little bit more. Taps into the bottom one. Let's see if we can have a trade. And then you can follow these lower time frame kind of continuations. You notice that like it's just playing ping pong between this sell, push in, push back, push up, push down, and it's just this continuous ping pong action. But I don't take the sells when I'm looking bullish. Sure, you could have probably taken a sell up here. On the 5 second, there might have been an opportunity to actually take a trade and make a little bit of money, but if you just take all the buys that are following trend, there's no reason. You don't need to take everything. As for this trade, let's go on the let's go down even further. So again, push into the zone, respect the sell zone right here. Ultimately, we can do this fucking wedge stuff that some people trade. We trade breakouts and stuff like that. It's kind of up to you however you want to do this, but again, you push up. This zone should not be respected after we tap into this if our direction and zone is correct. Sure, we're never going to get it perfectly. But, I mean, like, if you follow, we take a little line right here, a horizontal line. We follow this down perfectly. We can see the 5 second refinement of the candle that it taps into. It taps into this candle perfectly. Imbalance, candle underneath, buy zone. We draw it. It's perfect. You can refine and take trades like this if that's how you want to kind of do it. As for me, I'd rather just confirm on the 5 second to see the reaction because sometimes this won't even hold for anything. But you can see again, it works. It's pretty like repeatable. Buy zone right here, another buy zone right here, 2 candles, imbalance. I don't care about the color. It's imbalance, candle beneath, imbalance, candle beneath. Respects this, but we don't think this is going to hold for lower prices. This is simply just going to be a pullback. And again, that's what it is. That's what it ended up using. As for this zone, like we can kind of just see like bearish, and then after this breaks and this zone breaks, I'm completely bullish. And for all you guys that trade wedges and stuff like that or pennant flags or whatever, you can take trades like that. Ultimately, it doesn't really matter because we're following the same stuff. If you did take this trade, it is a little bit risky. But, I mean, depending on how much you risk, you can simply place your stop loss underneath this zone for a little safer because it could ultimately come down to the lower one. You don't know. Or you could place it like this for a chance to make a little bit more RR. Again, your target, follow the highest zone imbalance. Again, this is fucking repeatable. We mark it out. There's like nothing else I can show you that's more perfect. Imbalance, candle above. You target it. You could target lower. You don't know if this one will hold. So, I mean, oh shit, you actually make 5 to 1 on your money instead of 7. Tough shit. Like, that's still good. We mark out this 5 second zone right here. Obviously, it doesn't come to the 5 second because this zone is tiny compared to it. But if you go into like a 15 second, we can probably go back there and yeah. 15 second, maybe even a 10 second will look a little bit better. Nope, 10 second doesn't hold. So it would actually be a 15 second. And ultimately it would be this candle, which did hold. push up, come back, imbalance. Again, there is this zone right here. So if you were to take this trade, it would be best to stop loss underneath the low. Because yeah, sure, you might get wicked out of the trade if you don't do that. There's more money to be made if you don't do that, but it's all just kind of personal preference. Go on the 5 second. This is that 1 minute zone that I showed you right here. It's a lower time frame zone, so I mean it would look better on like a 30 second, or actually honestly a 15 second. We see push up, it breaks the high, it comes back again with the higher versus lower zones. If you did take this trade here, this is an example of where you would have taken a loss if you didn't cover the lower zone. And so we do have this buy zone right there, and then we also have the buy zone right below, and we can see that the bottom one does hold. Ultimately, you want to see the bottom one hold. If you didn't get into that, there was always this one. Continuations, we see a push up, come back. Where does it come back to? 15 second continuations again. Ultimately, like there's enough moves here to make enough money, bro. And then if you're on the wrong side of the market, you have these zones that are still acting as pullbacks, but we think they're going to get ran through because our bias is to continue up instead of down. So yeah, those some trades right there. We kind of follow up. Where does this candle stop? Where does it stop? Right there, to the tick. This stuff is pretty fucking accurate. I mean, I've spent a lot of time myself learning and showcasing this stuff to my friends and stuff like that, and spent a lot of time trading this. So again, no guarantees that this is the zone that holds. Again, like I spoke about earlier, you'll have this zone for a continuation, but it'll end up tapping into the lower one again. So if you want to be safer, you put your stop loss beneath the low. I've noticed this enough times. And there's also this buy zone below. There's also another buy zone even lower. So it's up to you to determine how you want to confirm these and enter, because sure, it looks perfectly clean, but there's no way to know that this zone is going to hold versus something like this. So that's kind of up to you to figure that out for yourself and how you want to enter, how you want to place a stop loss. Push up, come back. Where does it continue? Continues on this zone. Like, I mean, like it's pretty fucking picture perfect. Push up, come back. Where does it come back to? The candle underneath the imbalance, to the tick right there. And then you just kind of get continuations. We're going to continue on because there were a few more examples that I did have. But again, I have not actually seen the 5 second results of this. I was sick during this day, so ultimately I am showcasing this just kind of live. Here we go. Sell zone, 1 minute zone, higher time frame, 5 second confirmation, pushes, taps into the sell zone. We see the wick. Great entry would be right here on the candle high, meaning the break of this high, or you could take it simply right here if you'd like. But I would like to see kind of the candles push above this. So you get something like that. You put basically like a buy stop, and you can target higher. Where does it tap into? Look at this stuff. It's, again, you can support and resistance if you want to call it, supply and demand, SMC, SM not C. I don't fucking care. It doesn't matter. It works. At least for me. I'm able to find my edge from it. But yeah, take a trade like this, sideways action. I don't like that shit. Meaning these are like kind of the rolling over highs that I'm talking about. Meaning these are going to get blown through, and you can simply just take it above the high, because a lot of times when it's this sideways action, it'll get wicked and then it will come back down. So TP like that, 1 to 4. There's so many different opportunities today, or not today, but like on this day. Again, kind of show you an example of stuff that doesn't work. We're going to go on to the 1 minute. Sure, this 1 minute zone acted as a reaction point, but the ultimate zone was the bottom one. And what's crazy about that is there's still opportunities on this zone. Push into the sell zone. Again, you guys that trade wedges, you expect this zone to get ran. And so if you were like a wedge trader or a pennant trader, or however, like a breakout trader, you could take a breakout expecting this, and then you ultimately place your stop loss like that. There was a chance for you to probably at least go break even here. And where did it go? It tapped into right here, and then it reversed from here. I mean, I don't know if that'll show in the 1 second that far back, but you can see there are a few candles that it did end up going into. The imbalance candles were this one to the tick on the 1 second that ended up holding. I mean, if this isn't more specific. This is a 1 second candle that's holding price. But ultimately, I wouldn't be looking to buy off of these. You could confirm this further on the 1 second, but I'm not at that point in my life where I want to confirm these things on the 1 second. Ultimately, we tap into the bottom zone that I showed you on the 1 minute, push down. Sell zone gives the confirmation that sellers are no longer holding it. There's the reaction, but it continues through. So that's the little pullback, break, come back, retest. And then honestly, dude, it's like retest, push up, come back, retest. Probably would have taken a loss here if you didn't cover the low. The zone's here. You can see in the future it does come back lower. I'm not even going to kind of cover this, but this is like a 1 second zone on some lower time frame stuff, but it doesn't matter. Cover the lows. Ultimately, you want to get in at the fucking earliest point possible, which is this. So taking this is basically just ping ponging off of this sell zone and the buy zone. These first two entries are the best ones. You can see that if you didn't get those first two entries, it was not great. You can target up here. You can target through this zone. Whatever you want to target is ultimately up to you. Yeah, it's ultimately up to you. Target stuff, the opposing zones, that makes sense. Sure, it didn't come to this one and hold, but you can see if you did draw out the top one, this is the reaction point that it gave. So you had a chance to make some money there. And then on the flip side, we're in this 5 minute kind of reversal area that I talked about a long time ago. So if you were feeling a little frisky, you could go on the 2 minute, mark out this zone right here, and look for shorts because this is an area for shorts. And so ideally, you're taking longs here. If this long doesn't break through this high, that means, and this zone holds, if this sell zone starts to hold for lower prices, we can see sellers are in control versus this, because I mean, like, we've been buying up like this, and then we're finally seeing like kind of a fold over. And if one of these zones don't hold and the seller zone does, it's kind of a shift. And again, it's this fucking sideways falling over, and then we can see lower prices. And that's ultimately what we did see. See the tap in there. We go on the 5 second. Again, we see a buy zone right here. Right here, to me, this is my zone right here. Because that low broke, I'll be looking to sell off of here or up here. Safest way is to cover the stop loss on the high. You can just cover the zone if you'd like. You do count for spread, so maybe 1 or 2 ticks. But I don't believe we get tagged in on this trade, and it just happens to be one of those that we barely miss. If you were lucky, spread would have actually tagged you in the trade, meaning prices here and spread would have tagged you in. But you can see that most likely we didn't get into that. Again, this sideways action, a lot of times when we see pushes down, we'll see like push up into the zone, and then we continue, and then we'll do this sideways thing and then just run. And then there's opportunities for wedge and pennant traders or breakout traders like this kind of before the low is broken. See that a lot actually. Yeah, we just again take the low, know what I'm talking about. This is that sideways action like this. Take the low, we do make a push up and then continue lower. Stuff like this, again, gets ran a lot, pretty often, to be honest. Go on the 1 minute, let's just continue through the day. You could be looking to confirm this zone right here. It's pretty aggressive, and by what I mean by that is like, you can see this is kind of like slow action, whereas this is just like a fall off the face of the planet. I like to see like zones like this and then take a zone like down here. I don't like these straight V shapes to enter off of. So I mean, even if you were confirming on the 5 second, you would have been fine here. You wouldn't have actually had a trade. So it's not like you would have taken a loss. On this top area, let's see if there was actually a trade. Potentially. We get a zone here. You get the break. If you were quick on your feet, you would have seen the tap in on the 1 minute, and then you could see this zone broke, wicked, lower, and then ultimately there was the zone right here to sell off of. And then you could have just entered right here, stop loss at the high of the zone or the high of the actual thing. It doesn't matter. But ultimately, this was probably the better one if you didn't want to risk too much. So for entries like this, you just risk less. It's pretty fucking simple. Your targets don't change. Again, what did I tell you? This is that rollover piece, this rangy price, and then ultimately, like, the best target to me would be like underneath all these lows right here, or you target again like right down here. Again, we're gonna just mark out this 5 second, like let's actually mark it out perfectly. We do play it out. Again, this stuff is to the tick, like to the actual tick. So when it comes to taking profit, you might want to take it a little bit higher up, because if you do, let's mark it out so it actually is. Because of spread and stuff, you might actually not get tagged out of that. So you might want to take it a little bit before. You just keep trading and stuff like that. And it does continue lower. Go into the 1 minute. Mark out this 1 minute zone. If you were looking for buys, there was an opportunity here, but again, this is kind of counter trend now. You're looking for buys when everything is going lower. So ultimately taking sells here or sells up here are probably the better bet. 5 second comes back down. I don't know if there's an entry here, to be honest. Let's kind of see. I guess there was. Here, sell zone gets ran through. Sure, it does wick the high, but again, that doesn't matter because our bias would be bullish, at least temporarily. Here's the lower zone, taps into the candle, continues up. Where do you want to target? Above these highs. Why do you want to target above the highs? It's kind of that rollover movement. And ultimately, like, there you go. So that's one thing I have been noticing. And again, it's kind of this rollover again. It wicks up the highs. See this rollover action, it wicks the highs, and then that's when the reversal happens. Funny enough, where does it come back to? This candle right here. Sorry, let me actually like mark it out so it fits. There you go. To the tick. Again, this is so much precision. I don't know how else to explain this to somebody. It's so accurate. Like it's an unbelievable thing. And sure, this is hindsight, so figuring this out real time is not gonna work like that always. But like, you could be taking buys here. You want to aim for the bottom zone. Having a zone before another zone, you don't want to take the top one. You always take the bottom one. There was a chance for a good entry here. It does end up tapping. I know, like, when you zoom out, it can get a little weird. It will look like sometimes it's not actually tapping into it, and it's fine. Pushes up. Where does it come into? 5 second refinement right there. To the tick. Like, the precision on this is like kind of unmatched. I've not really seen anyone else do this. And so yeah, just gonna kind of continue up with this stuff going through the day. This is more a showcase, not so much me like flexing that this shit is better than, or the golden fucking nugget. It doesn't really matter. And I believe that's kind of the end of the day. I haven't even looked at these last zones either, so maybe there's opportunities, maybe there's not. Again, we get tap into this, tap in, push up, come back. Where does it come back into? Again, there you go. You're either break even. Again, where do you take profit? Before this zone doesn't tap, it ends up being probably a 10 second. So if we end up going back there, it probably ends up tapping into like a 10 second or a 15 second zone. Yeah, so there's the 15 second zone, taps to the tick. And so you got to keep this in mind. Like, it's not always going to tap the 5 second version of that zone all the way at the top. So that's why I'm saying you should probably take profit a little earlier. And yeah, so it's funny enough, like, where does price come back to? This bottom wick comes back to the lowest 5 second area right here. And I mean, wicks this low, so it's like taps into the zone, can't close beneath the low, entry, perfect. And then if you can't get this entry right here, pushes up, comes back here, you probably want to cover the low. And you can see, again, this is an example of like, okay, there's a zone right here you'd look for a continuation off of, right? But it does come back even lower to the bottom one. So this is a time that a zone will sometimes get tapped into twice. It's just nice to know that you should keep your stop loss if you're going to take this one beneath this one, just in case, because it's something I see happen a ton of times. And yeah, push up, come back, tap into this zone. We could get some continuations. I believe there is one last 1 minute zone that I remember. Yes. We're gonna look at this old 1 minute zone. Every zone kind of is valid. When it's more extreme and old like this, I do end up like taking it. You see, tap into the zone. What happens? It wicks this right here, therefore invalidating it for me, and so I'm looking bearish. And again, taps to the tick, covers the full zone. It's fine. This is going to be kind of hit or miss because your trade is going to look something either like this, and then you kind of cover for spread, so it'll look like that. You should have been able to get out of this trade. Like you should have been able to hit take profit, and we just mark out the zones right here, and you can see like it does tap into it, and then it just continues lower because this just acts as a pullback a little bit because this should not hold. Again, where you want to target, this is that weird sideways stuff. So if you were to target something, I would aim for something like right down here. This is a valid zone, probably aim a little bit higher, but I don't like targeting. I like targeting the lows of stuff like this. I wouldn't target here, I wouldn't target here, I wouldn't target any of these sell zones, or buy zones, sorry. And ultimately, like, this was the day. There's a lot of money to be made, but there you have a ton of days like this. As long as you cover for spread, as long as your targets make sense and everything is kind of repeatable, you're good. And so, yeah, leave any questions, let me know.